Hi, this is Bennett Tchaikovsky, and today we're going to go through a very basic example of how to go through and create financial statements if we're given a trial balance. Frankly, I would never give this type of problem, mainly because I think it's a better exercise to go through and to actually create financial statements from the raw transactions. However, we sometimes don't have time to do that on all tests. And I can't give 7-hour exams, which is like my dream. Anyways, so here we go. We've got a trial balance here for Aussie and Gray. And in this trial balance, we're given everything except for retained earnings. So I have all the other things. And what I'm being asked to do is to prepare a multi-step income statement and statement of retained earnings for the years ended December 31st, 2018, and a balance sheet as of December 31st, 2018. So I'm given beginning retained earnings, and in order to do a balance sheet, I need to know my ending retained earnings. So in order to do this, I need to first have So in order to do this, I need to create the income statement. So here we're going to have OGI, income statement, for the year ending 12/31/18. So what we're going to do is we're going to start with sales. And remember, when we're doing this type of income statement, we're not doing revenues minus expenses. We're doing sales minus cost of goods sold. If we are a retailer, it's going to give us gross profit, subtract selling, general, administrative, and we'll go from there. So my sales here were 2 million. I'm then going to say less sales discounts, less sales allowances, or RNA, returns and allowances, is going to give me net sales. So here my sales returns are going to be a negative amount because it's a debit on the income statement side. And then here I'm also going to have a negative amount for the returns and allowances. So my net sales is going to be $1,850,000. Then I subtract cost of goods sold, and this is going to be less $750,000. And so my gross profit, meaning what did I make on my inventory sales, is going to be $1,100,000. The next thing I do is I'm going to now say less selling, general, and administrative expenses. So what do I do now? I'm dumping out everything here. So I'm going to have sales salaries expense, and I'm going to copy these right on down the line. So again, these are all coming here, and rent expense, office expense, selling, general, and administrative. No, sorry, I went too much. Okay. So rent expense, office space. Okay, perfect. So right here, my total selling, or my total SG&A, okay, and what we're referring to as SG&A is this. So my total SG&A is going to be $704,000. So my operating income, or my income from operations, is going to be 1.1 minus 704,000. Okay, so now I've done that part so far. Now, what about these other items? So when we're preparing an income statement and we see things like rent revenue, interest revenue, or bond interest expense, I would classify these as other income or expense. And the reason why is that if I have rent revenue, interest revenue, or bond interest expense, those are really not non-operating type expenses. These are more like financing and kind of ancillary revenues. So what I'm going to do is just show these separately. So I'm going to have here other income / expense. So here I'm going to have rent revenue, interest revenue, and here I've got here total, and then I have my bond interest expense. This is going to be negative 50,000. So my total other income / or my total other expense is going to be the sum of these three items, or 25 plus 10 plus 50. So my net income is going to be my operating income less the total other income or expense. So now I've gone through and done this. What I can now do that I have net income, I can go through and determine what were my retained earnings, or better yet, what is my ending retained earnings. So what I'm going to do now is for OGI, I'm going to do a statement of retained earnings. Again, it's going to be the same thing for the period ending December 31st, 2018. My beginning retained earnings was 644,000, and that's going to have to be given to me in this type of problem, or I need to figure it out some way. Plus net income. My net income is coming from right here, and we'll make a nice highlighting color because it cannot be a Tchaikovsky Bob Ross video without colors. It's got to have some kind of highlight. Okay, less dividends. So here, my dividends that I paid, or what did I give back to my shareholders, is going to be 25,000. So my ending retained earnings is going to be the sum of these three values, or $1 million. Wow, that's great. I somehow did that. Okay. So now that I have my ending retained earnings, I'm now ready to do my classified balance sheet. So this here is going to be OGI balance sheet as of 12/31/18. So here I'm going to have my assets. I'm going to start here with current assets. So for my assets here, my current assets, I'm going to have cash of $3,050,000. I'm going to have accounts receivable minus my allowance for doubtful accounts is going to give me accounts receivable net. And the reason why I can, and again, you have to show the allowance. In reality, it depends on how significant the number is. So here, we're just going to go ahead and show it. Oftentimes in the balance sheet, you'll just show accounts receivable net, and you'll do the disclosure of the allowance in your footnotes. So my other current assets, prepaid insurance, inventory, office supplies. And again, with current assets, this is where we're going through and assuming that we're going to be using these within the next year. So my total current assets are going to be $4,910,000. So that's my first part here. The next thing I need to do is to say, what are my non-current assets? Now, there are some companies today that will just dump everything else after current, but we're going to be nice and label this here as non-current. What does non-current mean? Meaning longer than a year. So land, office equipment, accumulated depreciation on the office equipment. So my land here was 100,000. My office equipment was 400,000. My accumulated depreciation on the office equipment is a negative 300,000. So my office equipment net is going to be $100,000. Okay, then we get to patent. Accumulated amortization on the patent. We'll get patent net. And sometimes you can see this just being shown as intellectual property. Then after I go through and do this, I then have here goodwill. And so my total non-current assets. So my goodwill here is 500,000. My total non-current assets will be 750,000. So my total assets are going to be my current assets plus my non-current assets. And so I've got 5,660,000. The next thing I need to go through and do is to kind of go over here and give myself a little bit more room. There we go. The next thing I need to do is I'm showing the AELOE, or that my assets are equal to my liabilities plus my owner's equity. My liabilities are right here, current liabilities. So for my current liabilities, I have salaries payable, accounts payable, unearned revenue, accrued liabilities, sales taxes payroll, payroll taxes payable. And so my total current liabilities, or those liabilities I will be paying within a year, will be 100,000 plus 400 plus 100 plus 200 plus 30 plus 80 plus, that's total. So my total current liabilities is going to be 910,000. And now I get to my non-current liabilities, or those that will be paid beyond a year. So I have bonds payable, premium on bonds payable. That will give me bonds payable carrying value. So my bonds payable here was $1 million. My premium on bonds payable was 50,000. So my bonds payable carrying value is going to be $1,050,000. I have a long-term note payable. This long-term note payable is 200,000. So here, my total non-current liabilities will be these two amounts here. My total liabilities will be the sum of these two values right here. So now I go to owner's equity. So for owner's equity, what I'm going to be showing here is I'm going to have preferred stock par value 5% cumulative, additional paid in capital preferred stock. So what I'm going to do is just kind of show these numbers here. I don't really worry about subtotaling these. And then I'm going to have common stock at par, additional paid in capital common stock. And let's go ahead and do those. Now, when it comes to treasury stock, with treasury stock, what I need to go through and do is this is a contra equity account. So when I'm showing this, I'm going to show less treasury stock, or we'll go less treasury stock. So here, this will be a negative 500,000. And so this is going to be less my treasury stock. And then what I'm going to have here is I'm going to have my retained earnings. And my retained earnings is what I computed earlier. And we'll give another color to this one. A nice, bright Magenta non-cash transaction color. So my total owner's equity is going to be $3.5 million. My total liabilities and owner's equity will be $5,660,000. And so I've gone through and I've balanced. Now, in reality, does a balance sheet look like this? And the answer is no. But the reason why I'm showing all these various columns is that so you have an idea in terms of how to go through and compute the numbers. And just to kind of give you like a better clue, I'll just give me one moment. So this is what a balance sheet more in reality truly looks like. As you can kind of see, it has none of those, you know, crazy headings, but rather it just has like, okay, here are current assets. Notice a lack of designation for any type of, you know, any type of other asset like long-term or non-current. And you kind of get down over here into various different things, like you've got additional paid-in capital, retained earnings. And so this is really what a typical balance sheet looks like. So when you compare that to mine with all these funky columns, I probably would get about 50 review notes from my supervisor about what's wrong with me and why am I doing it this way. So, but we're here in learning introductory accounting. So I'm more concerned that you understand that total assets have to equal total liabilities plus owner's equity. And just so you can see for a company like Facebook in terms of revenue, here's how they go through and report their income statement. And if you notice, a lot of the different income statements, you'll see some consistencies, but what it really depends upon is what type of enterprise is it. That'll be going through and determining the type of financial statements you'll have. So this is to give you an introduction, or how do you go through and solve a income statement, statement of retained earnings, and balance sheet type question for a exam if you're given a trial balance with no ending retained earnings. And hope you have a great day. Thank you for watching, and I hope you like and subscribe.